Hello everyone. Today we'll be learning the new topic called as depreciation. What do we mean by depreciation, how the accounting is done and so on. Understand. Suppose we start a business and we start a business of manufacturing of shirts. Okay. So what do? We are in the manufacturing sector and here is our this factory where we have placed so many machines also, and this is factory working and there are so many machines here. Okay, now little different machinery because these are been imported from Germany. Simple. Now understand, this is my factory, there are so many machines we have purchased. Now what I am asking you is, suppose I have purchased these 4 machinery, say for rupees 4 lakh. Okay, these 4 machine costing rupees 4 lakh. Now if I ask you, tell me, will these machines run for 50 years, 100 years or for unlimited time? You will say, no sir, obviously not, because all the machines will have a limited period of life. Very good. So if you give me an authority, can I say that the life of machinery, which year or how many years of life you want to expect? Tell me. You can take 5 years, 10 years. We are just taking an example. Okay. Suppose life of the machinery is totally 10 years. What do we mean by the life of machinery? That for the next 10 years, machines, we expect that the machines will be working properly. Okay, it means whatever production of shirts it is doing today, it will do almost for the next 10 years. Obviously we have to incur some repair expense, then in between of few years some maintenance cost we have to incur, but that is nominal, that will be charged for all the machines. Okay, so we are expecting that the life of machinery will be 10 years. Simple enough. Now tell me, the total cost was 4 lakh rupees. Okay, and I am expecting that these assets or these machineries will provide me benefit for how many years? 10 years. So can I ask you, if I want to calculate that these machinery gives me benefit every year? Obviously, can you tell me the amount of benefit they are giving every year? You will say, sir, very easy. The benefit given in 10 years is how much? 4 lakh. So we can obviously say that benefit in 1 year will be 4 lakh divided by 10, that is 40,000 rupees. It means that if I have invested 4 lakh rupees in my machinery, I can say that for the next 10 years I will get the benefit of 40,000 rupees each. Simple. Now understand, we change the language, and if I tell you that I have the machinery worth 4 lakh rupees today, okay, I have already taken out the benefit, or I have already derived the benefit from that 4 lakh of 40,000 rupees. Now tell me, suppose today is 1st April 2011, we purchased the machine for 4 lakh. You can say this is our asset. Asset means the total benefit we are supposed to receive from these assets are 4 lakh rupees. Okay. After 1 year, that is on 31st March 2012, 1 year gone. You will say that in this 1 year we already received the benefit of 40,000. Now can you tell me how much benefit I am still supposed to receive? You will say, sir, you are still supposed to receive benefit of 3,60,000. Understood? Suppose again 1 year has been gone, 31st March 13, then again 40,000 gone, then the value of the asset will be 3,20,000. It means what we understand is that the value of the machine will decrease over time because I am using those machines continuously, and as I am using those machines continuously, they are providing me benefit and their life of machinery is also reducing. So we can say that the value of the machine is reducing every year. Obviously the capacity will reduce little by little. So we can say that the value of machine is reducing every year. So you can say the reduction in the value of machinery is called as depreciation. What do we mean by the word depreciation? If we take it as an English word, depreciate, it means the reduction. Okay, depreciating means reducing. So when the value is reducing, that is called as depreciation. There can be many reasons of depreciation that we will write now while we will be understanding the definition. You understood what is the basic structure, why this chapter exists. See, depreciation came because we are supposed to understand that the life of the asset is reducing and the benefit it will give will be reducing. So every year we are taking out little advantage from that. So you can say, you can understand by this also, that suppose today I am purchasing some machine for rupees 4 lakh, okay. If I keep it for 2 years, do you think that the market will give me higher price or lower price? Obviously you will say, sir, the market will give you lower price only because these 2 years we have been using this machinery in our factory. So we are using this machinery, so much workload it has been on that machinery. So the value will definitely reduce. Understood? Now we will write here the definition. Concept 1. What is depreciation? See, you can say it is the reduction in the value of assets due to, what did I say? We were using continuously. The word used in accountancy are due to wear and tear. It means continuous usage only. Or with efflux of time. What does it mean? That so much time has been passed, even if you use it or not use it. If suppose some machinery is there in your factory for 15 years, if you have not used it, even if there is a bicycle in your house for 15 years, no, the value will go down, okay? Because even if you have kept that in your factory also, in your godown also, or wherever you have kept your bicycle also, the value will automatically go down because you have not used it. In 15 years, the iron will rust and so many problems will be there. Understood? Or with efflux of time, or due to obsolescence or accident. You can say that. What do we mean by obsolescence or accident? See, suppose that accident can be anything, like if suppose some fire has happened in your factory, so the value of the machine will depreciate. What do we mean by obsolescence? Obsolescence means suppose there is some change in technology, okay, change in technology, some massive changes happened in the country or some massive change came in the technology world, so the systems we are using that will become obsolete. It means they will be of no use. For example, before almost 10 to 15 years we used to use these big size computers, no, these big CPUs and these big computers, what do we say, the CRD something, those computers. After that LCD came, LCD, LED, those things, very thin screen laptops came. So we can say now those computers, nobody is using those computers, okay. So you can say that whatever computers will be there with the shopkeepers, they all have to reduce the value of those computers. Why? Because now the technology gone obsolete, okay, now they are of no use. Now this is what called as depreciation. You can say that we are charging a particular cost, okay, because it is reducing, the value of the asset is reducing, so it is expense for us. So you will be writing here concept number 2, characteristics of depreciation. Number 1 is it is fall or reduction of book value of fixed assets except land. Understand this. Book value is also called as carrying value. Book value or carrying value means the value which is appearing in the balance sheet. Okay, suppose in the balance sheet building is appearing at 3 lakh. So on that 3 lakh we have to charge the depreciation. That is called as book value. The value which is appearing in the books of accounts, that is book value. Okay, or you can say carrying value. Now of fixed assets, why fixed assets we are saying? Understand, fixed assets include tangible assets like say building, furniture, laptops and etc. Fixed asset also include intangible assets like goodwill, patents, trademarks, etc. Then we are just making another part here just for the purpose of depreciation chapter. Okay, tangible, intangible, and third I am taking here is mines. Mines, or you can say that coal mines and all. Because why we are taking this as third bifurcation, I'll tell you. The reason is there are actually three words. First is, see, if there is the reduction in the value of building, furniture, laptops, we call it simply depreciation. Okay, when there is a fall in the value of these intangible fixed asset, see, if there is a fall in the tangible fixed asset, then what will you call? Depreciation. If there is a fall in the fixed asset which is intangible, then we call it amortization. But remember, if there is a fall in the fixed asset, which fixed assets? Only mines, okay, the coal mines and all, then we call it depletion. That's why we use the word many times that coal is depleting, mines are depleting, like that. Okay, so these are the three words which we use, but the meaning of all the three words is one and the same. Okay, we just use that for different set of fixed asset. Now the important part here is you can depreciate any fixed asset except one, that is land. What's the reason? You will never see land depreciating in any of your question. Land is also a fixed asset, but it is not depreciated. Why? Because building, furniture, laptops, goodwill, patents or mines all has a particular life. They have a particular useful life. Okay, that suppose building, furniture can be used for 10, 15, 20, 30 years. Goodwill, patents are taken also for some 25 years, 30 years, 40 years. Mines may have right to use for around 30 years, 40 years or 50 years. But that is only land. You can say the freehold land, there is no particular useful life of land. The life of land is still unlimited as declared by the accounting standards, or we can say the authority which controls the accountants in our country. They still say that the land can be used for unlimited life. There is no particular life for the land. Okay, so because land has unlimited useful life, so land is never depreciated. As per our example what we took, understand this. In this example we learned that if I have 10 years, then what did I do? The total value of asset divided by 10 years, so I will get depreciation for every year. But now if I tell you that there is a land of 4 lakh and the life is infinity, because land will be there for always. So if it is infinity, how will you divide that? 4 lakh divided by infinity, that is absurd result. Understood? Now that's why we cannot depreciate the land. After that, second point we have here is, see, point number 2. It is a non cash expense. Why? There is a machinery in your factory. Now every year you are using the machinery. The value of the machinery is reducing. Okay. Where is the cash flow in this? Your value of machinery is reducing. There is no cash inflow, there is no cash outflow. So it is a non-cash expense. Understood? Third and the last important point for us is it is a indirect, it is an indirect expense. Hence, it will appear in debit side of profit and loss account. Simple, because it is an expense, so it will be transferred to the profit and loss account. Now, these are the characteristics of depreciation. Now, we will be writing the concept number 3 here, that is objectives of providing or charging depreciation. Why is it necessary to charge depreciation? Understand. The very first point says to determine correct profit or loss for a particular period of time. If suppose you charge depreciation, you will transfer that to the profit and loss account. Simple. Then charging that to the profit and loss account, then you will calculate the net profit. Now suppose you do not write the depreciation in the profit and loss account only, then the profit or loss appearing in the P&L will be wrong. The question here is, but sir, why are we charging depreciation? The reduction in the value of the machinery, why we are taking that as an expense? Understand the logic behind it. See, if I tell you that I am using raw material, say thread and buttons to manufacture a shirt, okay. I brought thread and I brought buttons also to manufacture the thread. Now laborers are also there who are working on that. But I have to pay wages to the laborers. I have to pay money to buy thread and buttons. I have to pay rent for the factory. One more thing is the machine which is stitching the shirt, for that machine also I have to spend the money. The only thing is that all other expenses, whether it is rent, whether it is the cost of thread, whether it is the wages to the laborers, that we will be paying every month or might be every week or might be once in 6 months, okay. But machines we are paying for 5 years or 10 years. Understood? So if I have already paid the machine's value for next 10 years, I have to break that value for every month to know the actual cost of every shirt. Understand this, that if I tell you, suppose that depreciation every month is say 10,000 rupees, okay. Now if I tell you I am producing 100 shirts, so if I am producing 100 shirts and I am incurring an expense of 10,000 rupees, you can say, sir, for 100 shirts you are incurring rupees 100 each as depreciation. Understood? While selling the shirts to the final customer, I will add this cost also, or else I will be facing huge losses. Understood? That's why it will give me the correct profit and correct loss, whatever it is. Now, the next point we have here is check. To show true and fair view of financial position, or you can say financial statements also. If you will not provide depreciation, it means what? That your machinery or your fixed assets will be appearing at the original cost only in the balance sheet, but that is wrong. Understand? Before 3 years also your machine was valuing 1 lakh. After 3 years also still the value is 1 lakh. So the shareholders will think Why sir, machine value is still 1 lakh, how is it possible? In the 3 years obviously the value will go down because you have purchased machine, you are using it, so value has to go down. Understood? Next, to determine cost of production, that we have already understood. Now how to add that cost into our production. What is that production in our example? Shirts. Point number 4, to comply with statutory requirements. What does it mean? See, the law in India, that is, you can say the Income Tax Act also require us to charge depreciation. Okay, so we have to charge the depreciation. Now Companies Act also requires us to charge the depreciation. So even if you don't want to charge depreciation, you are supposed to charge it because the law of our country states that you have to charge the depreciation. You do not have choice, okay, to charge it or not. Yes, where you will get the choice? Now we will be learning about that. That is our concept number 4, that is methods of charging depreciation. What are the methods of charging? Let's see. There are two methods. See, actually there are so many methods. However, you can charge the depreciation. Okay, it depends on industry to industry. But now we are focusing only on the two methods of depreciation. Those are, first is straight line method. Second is written down value method. Okay, you can also call written down value method as diminishing value method or reducing balance method. Simple. Now straight line method can also be called as or fixed installment method or original cost method. Understood? Now we'll start with our first method, that is straight line method. Very easy, both the methods, just be with me. See, A is straight line method. Now what do we mean by the straight line method of depreciation? See, it is the easiest method of charging depreciation. How? Suppose we have a fixed asset. Say we purchased a fixed asset worth 95,000. Okay, and suppose we purchase that fixed asset and we have to install that in our factory. Say we paid installation expenses. Installation expenses also we have paid. We paid installation expenses rupees 5,000. Okay, so see, I bought fixed asset. Now I won't be able to use that fixed asset without installing it in my factory. So I incurred installation expenses also. Now tell me, what's the total expense for me for that particular asset? You will say, sir, you have spent 1 lakh rupees for that fixed asset. Very good. Now if I tell you, understand this, if I tell you that I have spent 1 lakh rupees for that particular asset and I am telling you that the scrap value or salvage value, one and the same thing, just different names. I am telling you that if I use this for next 5 years also, after the 5 years, no, after the 5th year, I will be able to sell this machine for 20,000 rupees. It means that is my scrap value. See, even if I use the machinery for 5 years, it doesn't mean that after 5 years machinery will be vanished. Okay, if I go into the factory and there is no machinery, it will not happen like that. You have to understand that machine is present, but it is not in that very good condition, but still it is there. The iron and steel are still there, the body of the machine is still there, so obviously I will get some amount for that machine. That is called as scrap value. When we purchase the newspaper in the morning, it costs us rupees 5, okay, so for a particular month it will cost us 150, but when we go to sell that entire month's newspaper, no, we get at least 20, 25 or 30 rupees. Again, that is the scrap value of the newspaper. So if there is a scrap value of that newspaper, there is obviously scrap value for every fixed asset, almost every fixed asset, okay. So if I am telling you here that on the first day I am buying a machinery for 1 lakh rupees, after usage of 5 years, so you can say that we are assuming there is a useful life of 5 years, okay. After I use it for 5 years, now I will still be able to sell it for 20,000. Can you tell me what is my depreciation for every year? You will say, sir, it is very easy. I said, how? See, we can calculate depreciation for every year, or can I say depreciation per annum? One and the same thing, per annum or every year. See, sir, you have told us that we purchased the machine for 1 lakh rupees, correct. Now you will still get the value of 20,000 after 5 years, correct. It means in those 5 years you will be using the machinery only of rupees 80,000. It means, can I write that out of total 1 lakh rupees benefit, 20,000 rupees benefit is still pending. It means I will be taking benefit of 80,000 in how many years? You will say, sir, in 5 years. So it is nothing but 80,000 divided by 5, that is 16,000. This is your depreciation per annum. But sir, where is the formula, sir? Without formula, how will we do? See, we have found out the answer without using the formula, or we can say it was just the common sense to find out the depreciation. Obviously, I will tell you the formula. See, the formula is cost minus scrap value divided by useful life, that will give you depreciation per annum. This is your formula for charging depreciation under straight line method. Understood? This is the method for straight line method. There is another formula you can use. Suppose these data of useful life, salvage value are not given. So what will you do? Take the cost. If it can happen, question will give you the data directly many times that charge depreciation at 20% per annum. So what will you do? Cost multiply depreciation percentage over. Understood? So in our case, if I say take 1 lakh and charge depreciation around 20%, so you will write here 20%, 20 by 100, it will make 20,000. This is your depreciation every year. Understood? So there are two methods. Sorry, in straight line method there are two formulas. It will depend on the data given which method or which formula we have to use. Okay. These are the two formulas for straight line method. Simple. Now after learning about the method, we will solve few questions, and before just solving those questions I will tell you the journal entries. See, journal entries. See, depreciation is an expense. Yes. Now it means depreciation is an expense, so we have to debit. The value of our fixed asset is reducing, so I can say that first journal entry, charging depreciation to fixed asset. So the journal entry will be depreciation is expense, depreciation account debit to fixed asset account. Simple. Now if it is expense, we have to transfer it to profit and loss. That we have already seen, it is the indirect expense. So you will write here transfer depreciation to profit and loss account. So the entry will be, whenever you are transferring, the expense will be credited. Okay. So profit and loss account debit to depreciation. Simple enough. It means that, understand what does it mean? There is an expense which is reducing the value of my fixed asset. Okay, because that is my expense, so I have to write that in my profit and loss account. Why? To calculate the correct profit and loss. Why to calculate the correct profit and loss? To have a true and fair presentation of the financial statements. Why is that necessary? To give the clear picture of the financial position to the shareholders of the company. Understood the chain? Now we will solve the capsule number 1 of depreciation. See, capsule 1 says straight line method. A firm bought a machinery for rupees 7,40,000. Okay, just one more thing I forgot to mention there. When we are saying here that you have to use the cost, it means when you are saying cost means original cost, original purchase price plus installation expense plus freight charges, that you can say the transportation of bringing machinery to the factory and other related cost. Okay, please remember this. This is very, very important. That is your cost. Simple. Now the first question we'll solve here. A firm bought a machine for rupees 7,40,000 on 1st April 2021. Okay, and 60,000 is spent on its installation. So this is your part of the cost. This is also your part of the cost. Simple. Then its useful life is estimated to be of 5 years. Okay, its estimated scrap value at the end of the period was 40,000. Determine the amount of annual depreciation and you have to find the rate of depreciation. How will we do this? See, first we will write the data here. Cost is equal to 7,40,000 plus 60,000, that is 8 lakhs. Then useful life is 5 years. Then scrap value is 40,000. Simple. You have to calculate the depreciation. Depreciation per annum is equal to cost minus scrap value by useful life. So your cost was 8 lakh. Scrap value is how much? 40,000. Useful life was how much? 5 years. So you can say this is 7,60,000 divided by 5. It will give you 5 ones are 5, 25, 26, 5 5s are 25, 1,52,000. This is your depreciation per annum. Understood? This is your depreciation per annum. How much it is? 1,52,000. Now understand, what is the another thing they have asked? They have asked the rate of depreciation. How will you find the rate of depreciation? See, very easy. Rate of depreciation. I will give you formula there also. Rate of depreciation is depreciation per annum divided by cost into 100, that is 1,52,000 divided by how much is the cost? 8 lakh multiply by 100. Solving this, it will become 8 ones are 8, 1, 2, 1, 2, 1, 2, 3, 1, 2, 3, 8, 19s are 152. So you can say the rate of depreciation is 19%. Simple enough. This is your formula for rate of depreciation. You will just write that in the fundamentals also. Rate of depreciation is equal to depreciation per annum by cost into 100. Understood? It is very necessary. Please understand these formulas, okay? And remember these formulas so that in the next video when we'll be solving the next questions, it will be very helpful, okay? Thank you so much.